All right, one more thing about taxation before we get to how we can solve all of this is there are some tax changes out there that can have significant impact to your taxes without government even changing the rules. There are some times where our situation changes. And if our situation changes, sometimes it could impact how our money is taxed. There's a term in our industry called the widow's penalty. And basically it just means that if we have a married couple and married couple filing joint, and then we have a spouse passes away, if our income needs are the same or similar, suddenly now we have the same level of income, but we're paying taxes as a single filer instead of married filing joint. Have you looked at the difference between the two tax brackets? They're significant. So if I were to quantify that for you, anybody want to guess, on average, how much higher the taxes are in this scenario if we're now filing single compared to what taxes were when we were married filing joint? Now I'm talking the same income level here. Right. It's 32.4%. That is an increase to their effective tax rate. So for example, if we're at 100,000, right? If we're at 100,000 of income, your effective tax rate would be about 11%. For 100,000 now for a single filer, we're at about 16%. That's 5, but that 5% of 11, that's 40% increase to your taxes. So it is real. And that average is based off to taxable income up to $500,000 a year. And actually in this case, the widow's penalty is more significant the less income you have because it represents a greater percentage of your base income.